What is going on YouTube? It's Sank and we are back with another one. Now in this drop, covering you guys with a couple of plays and to bring to attention. But before I kick things off, if you'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so that wraps up another day in these markets. Now I want to use this one as an opportunity to give you guys a stock update on a couple of our plays so you guys are always one step ahead of the game. Now there's a ton of moving parts in the markets right now, so I want to give you guys the intel you need on these plays to continue hitting success with me in these markets. So as always guys, in this one I've got a jam-packed one for you. Now before we get into the main event, I want to touch on this play first. So we're going to kick things off here. That's ticker symbol LOVE, that's Lovesac. Now this is one for you to get into last week when they dropped into the high 60s, and failing that was where they started off this week in the low 70s. The idea was for you guys to pull that buy the dip maneuver in anticipation of the rebound in the play. Now the move here was to get you guys into one of our veteran smash hit plays that we've already hit major success on this year. And you guys know if you don't get in on first entry, I'll always get you guys in on the next available entry so you guys can join these plays and start hitting major success with us on this one. Now if we check the score, this one's hovering around that $80 mark, so they've already started their rebound up to that $90 mark. Now guys, the lesson here is for you not to be consumed by any type of market volatility, okay? Anytime the market moves irrationally or any kind of unexplained movements in these markets, you guys just got to know you got to stick to the script, okay? Yes, you should have eyes and ears in the market and what it's saying, but ultimately don't let that deviate you from course, especially if you know these plays inside out, if you've got a high conviction play, done your diligence on them and you know where they're going, okay? You don't want to be shaken off path. So that's why I say it's easy money for the guys who jumped into this one, put 14, 15 points on the board on this in just a couple of days, okay? Now, anytime I give you guys a stock update on some of our runners, I always get people asking me, when should I get in? Can I buy now? What you guys need to know is this is a play that's had multi-day run-ups, okay? So they could be on course for a next red day over the rest of the week. So the idea is for you guys to get in on the dip below $75 on this one. Now if they don't drop to $75, you guys know the score, just move to the next winning play. You don't have to catch every play that's out there in the market. You guys know I put you on another banger so you can hit success over there. But for my guys in this one, I want you guys to know that yeah, we might hit short-term volatility, but we will be climbing up to that $90 mark over the next quarter season. So there's gains to be made here. So the moment you've been waiting for, onto the main event, that's ticker symbol HITI, that's HITI. Now I'm about to tear this one up for you guys today. So this one was fast out the gate on opening, but the volume wasn't there to sustain that level of momentum. It was like a tussle between the buyers and the sellers on this one during the day. Now we're still up 7-8 points on this one because we made great entry on the play, but that's neither here nor there because this is all just noise. You guys know you've got to detach from the short-term stock price movement and evaluate the business for what they're doing. I'm sure you guys have seen the news. Their earnings dropped and they were amazing, guys. Look, 99% of revenue, quarter-on-quarter increase. EBITDA looking healthy, that's the measure of profitability by the way. Cash balance coming in good as well. So there's a lot of good things to extract and the business momentum is there. That's just what we want to see as investors. Now they had all the ingredients from that earnings report to have a smash hit day. But you guys know earnings season can bring us volatility. And Wall Street doesn't always have to play fair, guys. Sometimes the markets can move irrationally and illogically. And we've seen it countless times before with a ton of our plays and some of our most winning plays at that. Just take a Lovesac that I was speaking to you guys about before. When they released their Q1 earnings, you guys remember that one dropped on the day over 10%. Around the $50 mark, mid 50s. Check the score on that one now, okay? That one's flying high. In and around the 80s and on course to get back to the 90s. So post earnings movement really is irrelevant in these markets. You guys just want to remain focused on what the business is actually doing. So I'm going to put you guys on some game now. High Tide, they've got minimal institutional ownership. That's the hedge funds, the money managers. So this play is a retail investor's game at the moment, and that means they're missing out on millions of buying pressure from the institutions. So there's no way this play is going to be operating at its full potential. And we know on the retail investor side of things, they're still very much in the AMC movement. So this play is just being shortchanged from both camps. But you guys know we always capitalize on these situations with quality fundamental plays. And as a matter of fact, one of the last times we saw a play move illogically after earnings was Revolve. And that's one of our most recent smash hit plays. So you guys can see how quickly fortunes can change for these plays. Now, in terms of what to expect going forward, guys, do expect volatility on this one, and it can go both ways. When you have plays that are very much in a retail investor's game, what you guys got to realize is there's a lot of psychology that plays into things. And right now, you're going to have a lot of retail investors who are maybe disappointed off the back of the earnings move. So you might get additional selling pressure in this one, but just as an opportunity for you guys to increase your position, increase your exposure if you haven't already done so. You guys know it's all about catching these quality plays at the cheapest price point possible. But what really matters, guys, is where they're moving, and I've got my eye on their Q3, because Q2, as well as it came in, they still had stores that were closed, and now they're going into a full reopening trade. So I'm expecting them to come out all guns blazing in their Q3, and they've made acquisitions that will be reflected in those results. So the future's looking bright for the play. Now with these plays, it's not about what they do on a game-to-game basis, especially if they're going to end up at the top come the end of the season, and that's what will unfold here. That's why I've still got my $15 price target on this one come year end, because of how much they've got in the pipeline. And by that time, I'm expecting a couple of institutions to come in and shake the game up. Now, you guys got to realize this is a rookie in most of our portfolios, but they're also a rookie in the game. You've got to give these types of plays some time to heat up. Do that and you will hit success. So if you've been rocking with the channel, you know what time it is. Is it too late to jump on Roku and Revolve Group? Alright guys, so to wrap this one up and to share some of you now, by now you all should know that Roku, Revolve are just two of our smash hit plays on the channel at the moment. Now what I want to say to you is, you got to reverse your psychology. I know when you see these plays on multi-green days running up, you think you'd be safe by jumping into the play. What I want to say is it's the opposite in the short term. These plays that have had multi-green days are likely to have a pullback and put you in the red. As I say, in the short term, you got to think. Plays like Revolve, plays like Roku, I've been beating the drum about those plays over the last couple of weeks to ensure you get into them when they were on the low. We were accumulating Roku recently where they're in the 330s, and Revolve when they're in the mid 40s. Now we've made 50% on our money on Revolve and 50% on our money on Roku. So you want to be focusing on those plays that are on the low right now, and I tell you guys about them on the channel on the daily. Plays like a Caesars, for example, is down and out. But we'll let you guys know that we're going through the reopening trade. Their casinos are going to be filled up. They're going to see a transformational move in their business, and they are going to climb. So it's those types of plays you're going to be focusing your attention and energy on, and plays that have been running up. Of course, they still have room to rise. Put them on your watch list for a pullback, okay? So yes, if you picked up a Roku and if you picked up a Revolve today, didn't open up your brokerage account until 3 months time, you'd be nicely in the green. But I know you guys like to be active in your portfolios and your accounts on the daily. So between that time, you're likely to see some red. And you guys know I like to minimize the amount of red you see in the short term, but also maximize the returns you make by getting you guys in at good entry on these plays. So I just wanted to share this one with you guys as we wrap this one up. As always, guys, I appreciate you. If you've got any questions, drop them down below and I get back to you. On your way out, do light up that comment section for me if you're new, join the movement, and I catch you on the next one.